Let's put the spotlight then on the buzzing stock in trade today, Samvardhan Motherson. Remember, through its wholly owned subsidiary, SMRP, they've entered into agreement to acquire a 81% stake in Yachiyo's four-wheeler business, which is a subsidiary of Honda Motor. That stock is currently flying high in today's trade. We've got Laksh Vaaman, who is a Sehgal, Director Samil, as well as Kunal Malani, the CFO of Samvardhan Motherson, joining in to discuss the contours of this deal. Kunal, I'm going to begin with you. The valuation of this deal, it's close to 1.7 times the EV/EBITDA. It does look fairly attractive, and the margins of Yachiyo are over 11%, which is higher than the consolidated margins of Samvardhan at about 8 to 9%. How EPS accretive is this deal according to you?
It is actually a net cash balance sheet that we will be buying, and hence a very exciting transaction for us. It's actually a very strong partnership that we have created here. Honda San will retain 19% in this business, and together the objective is to then grow this asset from here. On the number side, you're right, 23 billion is the 100% of equity value. 81%, that is 19 billion, is what we will end up paying for this asset. From a transaction structure perspective, we will be post on now this announcement, we will be going for antitrust filing, after which Honda San will be making the tender offer. Once the tender offer is successful, for which it needs to acquire 66.67% or 2/3 of the shares, is when the tender offer will be successful. Post that, it will acquire 100% as per the Japanese regulations. Honda San, mind you, is already owning 50.4% of Yachiyo today. After the success of the tender offer, Honda San will buy the two-wheeler business out of this, and then out of the remaining is what Motherson will buy from Honda San for the 19 billion JPY, as we were mentioning. So it is an equity transaction. All the cash flows associated with between now and closure will actually be part of the transaction itself. And we expect it to be a net cash accretive transaction at that stage. I mean, net cash balance sheet that we will be acquiring at that stage as well. Given all these elements that have to come into play, we expect the closure to be in Q1 FY25. And that's the time that we have to, spend this money as well.
Okay, so a lot of details coming in there, expecting the, integration to happen only in Q1 FY25, and then, of course, it's going to be accretive both in terms of the balance sheet as well as P&L. But, gentlemen, first of congratulations on this acquisition, but just give us a bit more detail with respect to the financials. The revenue and the margin number is available with respect to the stock exchange intimation, but what about the profit? What about the cash which is there on the books for Yachiyo?
If you the public disclosures of Yachiyo, given it's a listed entity, you would see that it is a 45 million odd euro net cash situation that it has today. As I said, there is a series of transactions that has to happen between now and Q1 FY25. The business will also be running in the intermediate and hence possibly be generating more cash on its way as well. We do anticipate that with the traction of the business, the performance, as you rightly said, it is a double-digit EBITDA margin business. It is generating close to 95 odd million euros of EBITDA. We do not see this as we anticipate this to be a fairly EPS accretive transaction, whichever way you frankly cut the piece.
Yeah, if I can add to what Kunal is saying, I think the really special thing about this company is it's a technology leader. Its product portfolio is not just one product, it's multiple products. Of course, now the largest chunk of the pie is fuel tanks. And as well as sunroofs, and they are really specialists in sunroofs. They have full capability from low end to the high end, and have the lion's share of Honda San's sales for this product. Of course, historically they have focused on Honda San, so we know the strict technology requirements that Honda San has for its products and the quality requirements that enable us to really bring in a lot more customers.
Okay, so Vaman, you highlighted that there is a significant insourcing opportunity with wiring harness, tooling, polymer, etc. So, how much of an impact will this have on your margins?
Yeah, we anticipate significant synergies to be driven once, of course, the transaction is closed. As you can imagine, this is a public listed company. So we can only estimate at this point, but we believe that we will have a lot more color on it once the transaction closes. All the products that are being used, they are using obviously plastic parts, they're using elastomer parts, they're using machine parts. So a lot of stuff is already present in Motherson's portfolio. We have economies of scale in getting raw material. I think again, our geographical footprint, our access to facilities which are close by to the customer, and also we believe that the fuel tank business is something that will continue and has a long tail. And as the future is also going to be perhaps with hybrid vehicles, hydrogen vehicles, this company has the unique capability to continue to develop these products for the customers. So again, we believe that very, very strong partnership is being formed with the acquisition of this company. Very, very positive outlook on where we can take this and significant insourcing opportunities, which will continue to drive a higher ROS.
Just Laksh, a follow up there, because you did talk about how this company has a capability in the hybrid vertical as well, and we usually talk only of the EV contribution that is there in the order book for Motherson. But going forward, what kind of potential do you see from the hybrid segment?
So I think you have a couple of questions there. I think the first one would be, look, we think fuel tanks have a long tail. This company not only is going for the regular fuels, but has capabilities to develop for the hybrid models. Also for hydrogen, has a complete development capability to develop that in the future. I think at Motherson, we believe that the future will have a lot of different offerings. I don't think it will only be EV. There will be space in the market for newer technologies and all these technologies that I've mentioned before. So the whole there's a lot of opportunity really out there, and we still haven't touched the commercial vehicles, off-road vehicles, what sort of energy they will be using. So again, I think Motherson's job is to take this plethora of technologies that Yachiyo has been successful in building to our other customers. And we believe that we will have success because they have very, very good technologies. Not only that, in sunroofs, they're a leader. They've been doing this for a very long period of time and have the lion's share of Honda San's requirements for this product, which can be easily taken to the other customers as well. And not only that, this company has been a real evolver. In the past, they've also been able to manufacture and assemble full vehicles for Honda San in the past. They do plastic tailgates. They have a bunch of different technologies which are, quite ready to be taken to the other customers as well. So I believe everything that we've seen really paints a positive picture for us with a lot of growth opportunities. And like I said, I think there is a good future for all its products in the portfolio.
So then, Vaman, Honda is 90% of your customer base. So what are the plans to expand the contribution of other customers, which are some of the other Japanese customers that you plan to tie up with?
Yes, well, of course, 90% of this company's customer base is Honda San, but there's 10% of the other Japanese customers as well. And of course, Motherson, we ourselves are also catering to some of these customers in different markets. So this only cements our position. We're able to, of course, offer the existing product line of Motherson, other components also to Honda San. I think this is something that is exciting for them. This is probably the reason why they're also continuing this partnership and retaining the stake, because they do see wonderful opportunities of business growth together with the Motherson Group and its products. The footprint of this company is amazing. It's strategically aligned to a lot of key places internationally where there are other customers located as well. So there's a lot of possibility again to cross-sell to customers. And their strength, of course, in the existing products such as sunroofs, such as fuel tanks, also capability to do plastic tailgates. This all augurs very well for Motherson, where we believe, I think, again, that we can continue to grow the product offering and diversify to the other customers.
Okay, gentlemen, on that note, we'll let you go. Thank you so much for joining us. And yes, the street is giving a thumbs up to that big acquisition and the plans that you have for the company going forward. 7% higher as far as Motherson is concerned.